Hello and welcome to the latest HFM Q&A series. I'm here with Chris Jenkins, the Managing Director of TORA, and Ovi Campion, Head of Product at TORA. And we're here today to talk about the future of technology systems. My name is Sam Dale and I'm the Head of Event Content at HFM. How are you, Chris?
I'm good, thank you. How are you?
Great. So just to kick us off, what is the most exciting development today in hedge fund technology systems?
It's a good question. I mean, I think when you talk about exciting, there is a relative term, but the most interesting thing for hedge fund and all fund managers currently is unification of systems, and that can be in two areas essentially. One is across desks or asset classes, so whether that's fixed income, foreign exchange, equities, etc., and the other is in the operational business side of it. So looking after each integrated part of the business, whether it's portfolio management, execution or operations, and the ability for funds now to have one system that really covers everything that they do, both from a functional perspective and an operational perspective, is incredibly exciting for COOs, because what they've had to deal with previously is separate systems, not only across their business, but also within their business for different functional areas.
Thank you. You mentioned obviously the unification is a big theme. The blurring of the front of back office is a big theme too. I mean, how are hedge funds evolving with the use of technology there?
Obviously the functions haven't changed over any time. You've still got operational people, you've still got portfolio managers, still got traders, and some managers, those roles really are blurred because they're just, very small businesses with maybe 2 or 3 people. But if you looked at a bigger business where there's a central trading desk, a portfolio manager, compliance, operations, the key to making them work more efficiently is if they're all using the same tools. So they're looking at the same system. So if there's a settlement problem for an operations person at the back end, they can refer back to the trader who's looking at the same software, the same trades in their system, to be able to help resolve it. If you've got a different system that those two people are looking at, there could be nomenclature basis problems, the ticker in one system is slightly different to the ticker in the other, which maybe for an equity doesn't matter, but for a derivative certainly does. And you've got to make sure that everyone's looking at exactly the same piece of information. So being able to share one system is hugely important from just a logistics perspective, as well as from all the benefits of having less integration and points of failure.
So what are the new developments and changes in TORA's new generation PMS?
There are numerous, but I'll just mention a few. The real-time general ledger will deliver trial balances, a detailed balance sheet, and income statements. There is also the ability to show and reconcile the shadow NAV through cash and NAV decomposition reports, and position and cash balances reconciliation, which will release clients from the operational burden associated with this process. Through the advanced swap contract modeling and support, the PMS can now create and track specific cash flow streams during any stage of the contract. The system also offers integrated tracking of P&L indicators and daily accrued interest. The time series enables clients to access historical profit and loss snapshots over any time period. The data is stored in snapshots and cached, which means that bespoke reports containing data points such as exposure, NAV, and fees can be produced very fast. The provided data can be accessed by dedicated user interfaces, a specific API endpoint, or can be integrated in Excel, which translates into countless combinations of custom reports that can be generated. The system also comes with a large number of predefined charts that are very intuitive and provide bird's eye views over the portfolio metrics like historical exposure and P&L, with top performance and top detractors, and also has the ability to drill down into details at position level. All these functions are accessible through a single sign-on platform and a unified user experience alongside the other TORA modules, the OMS and the EMS.
TORA has created a combined system to take care of OMS, EMS and PMS. So what are the benefits of this approach to managers compared to discrete systems?
I think it's all related to how funds have evolved in terms of job roles. Each and every person in the firm will need access to multiple views across all the modules. This means it's critical to provide a unified user experience and a unified user interface. It's also critical that all the modules speak the same language or use the same terminology, and the data transfer happens seamless between them. The total cost of ownership is also vital. Having to integrate multiple vendor systems together leads to increased costs. All the integration cost comes out of the client's pocket and will lead to increased implementation times and delayed launches. On top of all that, rarely there are two systems that can communicate all their data in a seamless manner. Sooner rather than later, there will be issues and vendors will just blame each other.
I mean, as I alluded to earlier, the biggest benefit is obviously not having those moving parts in between the different systems. We've built our system all in-house, so it's all built from the ground up and it's all built by us. So that means that we are completely in control of every part of that process and every part of that journey through the trade. If you look at look at having different systems, and some people will still have these, obviously, then you are slightly susceptible to a weak link in the system, which could just be a file sharing process that you have to do at the beginning of every day. And whilst in the main that will work fine, there'll be some occasions where it doesn't, and then you've got a problem that you need to resolve quickly. So the benefits of having one discrete system, or what one sort of integrates the system, I should say, are that everything that you do within the TORA world is controlled by TORA. You don't need to call anyone else to get an answer on why my positions aren't showing in my OMS when they are in my PMS, because that's just part of our database structure. So it's more about how we can make things better operationally and take away those weak links in the systems.
And hedge funds have a lot of options out there at the moment. So how is TORA's PMS different from other providers in this sector?
It's a high volume, low latency system. TORA PMS is hosted in the cloud and uses the same architectural vectors that made the OMS a success. Our PMS goes very granular and delivers deep data across all the functionalities it supports. It easily scales from small portfolios with a couple hundred positions to tens of thousands positions portfolios.
It's a really good question, and it's one that we're asked a lot, obviously, across all our products. What makes you better? And I think it's a combination of things. And like I was saying earlier, it's sort of building blocks. So in terms of what you need in a PMS, there are certain absolutely must-haves, as I mentioned. So the general ledger, the time series accounting, the ability to produce reports for clients and investors. Absolutely key. I mean, there's obviously many other things as well. So once you've got all those, it's what else can you provide? And when I talk to managers, the biggest thing they're looking for is how do I gain alpha? And in a PMS, arguably, there really isn't much opportunity to do that. So what we wanted to do was produce a tool that didn't stop at the PMS, but went through the whole portfolio management and execution and order management piece, because that's really where we can offer excellent value and allow managers to create that alpha, but they also need to feed it back into their operational back office. So it's more of a question of not how is a TORA PMS different, it's how is TORA different. And what the way that we're looking at it is we're trying to build you a system that is all you need to run your fund. And there'll be elements of it that will offer you excellent value, and there'll be elements of it that you absolutely need for your operational due diligence and to make sure that your investors are comfortable.
So what are the different approaches for smaller and larger funds?
Smaller funds are starting to only look for one-stop solutions, i.e. everything in one that covers their entire trading flow. They don't want the cost and the headaches associated with the integrations of multiple vendor systems. Large funds are starting to realize that their complex integrations are harder and harder to maintain, becoming operationally inefficient and dragging performance. So they start looking for platforms where they can unify all their flows. The main challenge is that these guys only want the so-called best of breed systems that cover the order, execution, and portfolio management functions. I think we are at a big advantage here compared to our competitors, and we are already seeing results.
So I think in an ideal world, everyone would want the best of breed product to do everything. The difference in maybe the large funds is their requirements may go slightly further. Certainly, they may go slightly further in the fund accounting element, for example. So I think what we're trying to do is produce something that all managers can use, and it will grow with them. It will grow with them. But equally, we are acutely aware that as the managers get bigger into those billion dollar sort of pockets, there may be other systems that we do need to interact with. And we're absolutely happy to do that, whether it's risk or, as I said, more detailed fund accounting. So it's a question of they're both trying to solve the same problem, but like you say, they will have different approaches, and that largely comes down to resources.
I'll just put you on the spot now. We've said it's a competitive market, so what would be your elevator pitch for why a manager should choose TORA today?
I think it's probably our approach. It's why we're in this business. We're in this business to be there as a service provider to hedge funds. So we know that space very well. We've been doing it for a very long time, and the way that we approach it is that we want to get really entwined in your business and really help you grow your business. We're not just here to get a contract or walk away. So we get in very deep, and we try and build software that, as I said earlier, is best of breed at every level. So we started in execution. I think everyone can see that we're at the top of the market in terms of what we can provide for an EMS in some of our algorithms, some of our TCA, for example. Then we've built the OMS underneath that, and again we've tried to build through rebalancing and extended compliance rules, and program trading, for example, things that are absolutely needed for a manager. And then this is the last step, portfolio management. And as I mentioned, you've got your general ledger, you've got income statements, you've got all the other pieces that you need. And I will emphasize you need these things, but you've got all the rest on top of it. So we are really trying to provide you something as a manager that you can start your fund with, and everything that we do will help you do that.
Well, thank you very much. That was fascinating. We picked up on some of the big themes there: unification, scalability, blurring of front and back office. So hopefully that's been useful for everyone watching. So thanks to Chris, thanks to Ovi, and thank you all for watching.